What's going on, everybody? Welcome back to another episode of Modern Kings. Today I'm talking about some stocks that I sold. That's right, I sold my stocks. Every year, or actually every quarter, but beginning of the year, I look at my financials. I look at the performance of what I invest in. Did it do bad? Did it do terrible? And sometimes I have to shift things around. And I end up selling some stocks that I just were not happy with. So I'm gonna talk about why I sold these well-known, high-quality, great company stocks. I'll also walk you through what my next steps are. So if you're thinking about investing or you're thinking about shuffling your portfolio around, stick around because I'm breaking it all down. So the stocks that I'm selling, actually they're sold already, but the stocks that I sold start with Johnson & Johnson. Johnson & Johnson, if you know it, is a household name. It is a company that produces shampoos, lotions, a lot of baby stuff, things that you use domestically in your home a lot. The tissues, the ointments, cleaning products. There's a lot that Johnson & Johnson makes, but I sold them because for me, they were just underperforming. They performed at about 5% growth within the last year, and that is unacceptable for me. The next one that I sold was Starbucks. Now, Starbucks has been hit hard in previous years. When companies decline and they make, CEO changes or CFO changes, sometimes the business just takes a dive. But you want to buy when the business isn't exactly thriving because that's when good profit comes in. And you should be willing to take that opportunity. I took the opportunity. I bought Starbucks a couple years ago. Again, it has underperformed for what I'm looking for, so I'm taking that money out. Procter & Gamble is another. They make a lot of household products, detergents, fabric softeners, tissue. Now, though Procter & Gamble is a stable, steady company, it only grew about 10% for me last year. Again, unacceptable. I'm looking for aggressive growth, and that's just not quite aggressive enough for me. The next one that I sold was Pepsi. Now, Pepsi, it's a brand name. I stand behind it. I guarantee it. Hit me in the comments if you know what movie that's from. Pepsi performed at about 9% for me, and again, just not aggressive enough. My next stock that I sold was Coke. Coke performed at 3% over the past year. Now, this next one really took a nosedive. Intel. Now, Intel is tech. It should be strong, but there's a lot of tech going on and a lot of AI going on. And Intel got dusted. Intel was down about 20%. And with all of the tech companies and the semiconductor companies, Intel is not leading the path. They're probably closer to the bottom of any of the big companies than any of them. So I got to take that money and do something else with it. Another stock that I'm selling is Adobe. Adobe's a great company. I use their products. They have wonderful cloud services, and they are the leaders when it comes to digital content creation. But again, I know what my benchmark is for hitting the investments, and Adobe didn't do it for me. So I'm gonna sell that, take my profits, and deploy the money where it can grow a little bit faster, based on my research. And the last one that I'm selling for now is UPS. UPS does a phenomenal job when it comes to global deliveries, international packaging. You can send it from here and get to Tokyo in 3 days. Like, the service is amazing. They are the enemy because at one point in time, I actually used to work for FedEx, but it's neither here nor there. I bought the stock. I'm selling the stock because it's underperforming. Now, all of these stocks that I just mentioned, they are steady providers of another stream of income. I sold these stocks from my dividend portfolio. If you don't know what a dividend is the company's profits redistributed to the owners of the company. When you invest into the company, you own a part of it. So every quarter, they pay profits out based on the company's revenue and the profitability, and you get that money. It is a wonderful additional stream of income. But personally, I'm at a place where I want rapid growth. I see rapid growth. I'm getting rapid growth in other areas. So I'm freeing up some cash that isn't moving very quickly to help it have some exceptional growth. So why sell these established, blue chip, reliable companies? Because there's something better out there. At one point in time, all of these companies, they're still great companies. They were the movers. They were the shakers. As an active investor, you should be attentive to what's moving in the market, what's next, what's now, what's outdated, what's growing, what's not. And that is why I'm selling these stocks. A dollar that's not moving is a dollar that's losing. That's how I see it. Yes, dividends offer a stable, reliable flow of income and additional money that you didn't do anything for. But I felt like the dividends weren't moving the needle fast enough for me. When I'm getting 80, 90, 120% in other portfolios that I have, and I'm looking at this one at like 20, 21, those little dividends aren't worth it to me. I'd rather take the money, make upwards of 80% return on investment, and then take that money and reinvest it back into a dividend portfolio later down the line. Now, it should be a no-brainer why I want my money to work faster for me. Everyone should want that. While I'm looking at my other portfolios, again, upwards of 80% return on investment, I'm looking at the 20% margin and just thinking to myself that, no, this money could be at this level if I free it up and move it over here. So that's why I'm selling some of those dividend stocks. I didn't sell them all. Like, for example, Apple is a dividend stock. Microsoft is a dividend stock. They performed great for me last year. I'm keeping them in that portfolio, but overall, I'm being intentional about my finances. So think about it this way. Dividend stocks are the slow and steady way to wealth, but sometimes you want a little bit more. So again, I'm just pushing for more aggressive growth. Now, whether I take this money and I get alternative investments or ETFs or others, tech stocks, it's all about aligning my portfolio with my goals. And if you care about your finances, you're going to have financial goals. You can't get to those financial goals without being active and intentional. Before we dive into what's next, if you're looking for your portfolio and your money to grow, be sure to subscribe to this channel. I've got plenty of strategies and personal stories to help you on your financial journey. Also, don't forget to check the link in the description, get on my calendar for a consultation, and take control of your own financial future. And also, if you know somebody looking to build their finances, please do share this video with them. I would greatly appreciate it. They would appreciate it too. Now, what's next for my portfolio? Now, just because I sold these stocks certainly doesn't mean I'm stepping away from investing. I'm actually gearing up. I'm looking into growth stocks. I'm looking into companies that are going public. I'm looking into companies that are being acquired by larger companies. If you're reading and paying attention, all of the information is right in front of your face. And it's certainly helping my portfolio to grow faster, and I know it can help yours. So if you're feeling stuck with your portfolio, or you have, I don't know, a money manager or a financial advisor, and they're charging you a fee and they're getting you lousy returns, and you're in a fund that has fees that you have to pay on top of that, you probably should be more self-directed. Again, if you need some assistance talking through this, get on my calendar. I'm more than happy to assist you with that. There is never a one-size-fits-all to this investment journey. The key is to stay intentional and make moves that reflect your desires and your goals for your money. So what's next for my portfolio? I'm going to take that money and I'm getting into stocks that I've been researching. There is no better thing that you can do than to research the companies, look for the fundamentals, look for the revenue, look at the profits. There are certain indicators that you can look for to know that companies are doing well. It's not about always getting into things that you like. You like Nike, so you should invest in Nike. Good, that's great. That's a great start. In my opinion, Nike is a terrible stock. You can do things as simple as putting the ticker symbol in and looking at the growth trajectory. So, for example, put in Nike, the ticker symbol, I believe is NKE, and then put in Microsoft, ticker symbol MSFT. Compare those two and see which one you prefer to have your money in. So it's not always investing in something just because you like it. So whether you want steady income or rapid growth, do your research, make sure that you're getting that. So particularly where I'm putting my money, I'm focusing on tech, I'm focusing on the emphasis of AI growth, I'm focusing on semiconductors. I can share those companies later, I actually have a full list of what I'm invested in on my Instagram to my subscribers. If that's something that you want, be sure to hit me up there. This is what I'm doing. I'm not telling you to do this. I am not your financial advisor, but I am a guy that knows financial knowledge and knows how to grow his own money. So there's that. My thing is, people get on and they say, I'm not a financial advisor, but I say this: if I'm doing better with my money than you're doing with your money, then I think we're in the right place. If you found any value in this video, click on this video. It's about investing 101. If you're overwhelmed, check it out. You also want to check out this video about investing and building wealth in your 40s, 50s, and beyond. Until next time, look your best, do your best, and be your best.